Whoa, hey guys, all at once.
What's going on?
Nothing too much. How's it going, Josiah? How's it going, P Money? How's it going, Calvin?
It's pretty good right now. I actually have some questions about EU though. Have you been looking at EU or not really?
Yeah, I look at it, but I wasn't really interested in trading on today.
Oh, okay. Yeah, because my question was like, how would you have maybe traded it if you were looking at it? Because that's pretty much like the only pair I try to look at because I want to just, just stick to one basic pair.
Mm-hmm. Well, let's take a look at it. We'll walk through it together. So,
okay, cool.
Give me 1 second, guys.
I actually took a L on there too, like today, but I see now prices actually going off of the same zone, but it's like it hit my stop, I guess, because I was trying to make my stop a little bit tighter. It ended up coming and taking me out, but now it's going in that direction because I was trying to sell.
If you have too tight of a stop, it will get you. So I would never prioritize a tight stop over the direction being right. Because like the worst thing to me to happen is that if you have the direction right, but price goes on without you, like that sucks. The feeling sucks more than anything, because you're like, dang, that's money that I could have had. But you got there is being right and there is being profitable or being profitable. You don't have to be right to be profitable. And what I mean by that is you could have the tightest stop loss because price has to come into this one area to move. Or you could have a looser stop loss because you don't care about being right, but it still ends up giving you money. And the market, in the world, you're rewarded for being right. In the market, you're rewarded for being profitable. Sometimes when you're not right, you can still make money or still balance stuff. So that's right. Keep that in mind. That's the ultimate end goal. So it's a balancing act. You got to make your decisions on what's in your trading plan and your rules and how you follow it to be able to balance the two. So that you don't have, like I said, don't have to always be right, but you can be profitable even when you're not right. So let's talk about it. So 4 hour, what is the market doing? Well, do you use 4 hour, 15-minute and M1, by the way?
Yes.
Okay, cool. So let's talk about it. This candle right here was essentially the candle that took off, right? And that candle was last week's news. So what ends up happening here is the market is kind of moving, but not at the same time. You got candles that are more moving sideways than you have an actual movement. Price makes a move up, makes a move down, price makes a move up. This was at the beginning of the morning. So what you're seeing is weak movement. Now you have to remember that pretty much anytime that you have a news candle, especially with the severity of the news when it comes to interest rates, what you basically have is a zone. And it's a zone where inside that zone, the market's going to take a while for it to kind of snap back. And what price tends to do is a lot of times it tends to consolidate in there. So I'm just going to draw this so that we can kind of remember where the area is. This is the reason why I just didn't partake in the market today, because I've tested this enough times to know this is what generally I come to expect. All right, going down to the 15-minute, what do we see here? Well, the market made a break of structure here, right? Price goes up and price comes down, and price is kind of moving a little bit more sideways, not moving too much momentum. You could really shrink your area into really it was this candle right here. Well, not even that. It was really these two candles, because we had the press conference. So this was the initial news right here. This candle right here was the press conference, and it went in until it ended at 2 o'clock. So you got to remember those two candles of news. So this is all like pretty much a news range. It barely breaks above, but the momentum you get a lot of momentum in these two candles right here. You get small candles as it goes and inches upward. Did you notice the difference? Do you see that?
You saying how smaller the candles were like after news?
Right. These three candles
Yeah.
are news. All these candles are after news. Look at how small those are compared to how big these candles are, right?
Right.
Look at what happens when we break the range that I drew. Look at what the size of the candle that we got. Is this one candle, this one green candle, bigger than a majority of these candles right here?
Yeah, right.
Yeah. Which goes to show
Yeah.
this ain't really a strong POI. Does that make sense?
Yeah.
So if you were
I
basing,
think so. What you're saying that's not a strong POI. What exactly is not the strong POI?
this, there is a demand zone in all of this, but it's not exactly strong. It's a pretty weak zone, right?
Yeah.
But if you wanted to try to catch a trade, there, if you follow market structure, there was no reason you should have been selling, because the market was still moving upwards. So there was no reason really for you to sell until it came down and broke this. If you had wanted to catch this trade and you were so confident about it, you would have to go against like market structure. But let's say, for instance, you got in somewhere right here, you would need to put like a super big stop because you're trying to take a sell in a demand zone. Does that make sense? I wouldn't even recommend doing that. I just recommend
Okay.
waiting for
Sure.
it to fall, because right now, yes, it's likely that it's probably going to drop, but it hadn't shown you anything until you had this break, which happened literally in the last 15 minutes. Actually, it really happened 8 minutes ago at the beginning of this phone call. So it was more dangerous. It was less probability from what you could see, but you did have a good hunch that it was probably going to do that because it failed to go up to this high point. It failed to take out this high, and you could have tried to, take a sell just based upon that. But that's probably a low confirmation type of thing. Whereas you have only confirmation you have is this higher time frame, but you're not seeing anything on your middle time frame that would allow for you to kind of corroborate that story. Does that make sense? There's always a narrative when you trade, but you just have to figure out what is it that you have to do, what things align together, and be able to make a full narrative as why you're going to take it. I would never take a trade off of just one reason.
Okay. See, my reasoning too, though, because like I seen that price had pretty much hit like a higher time frame 4-hour supply, like from back in the past, like I think from a few weeks ago. So like I seen that. So that kind of like made me feel like that. Then I seen like that first demand break on 15 minute. So then that's what kind of made me start looking to see if I could potentially get a sale. That was my idea behind it.
Market structure
Like you see that
wise.
4-hour supply
So
right there, back there.
yeah, that's what some people call unmitigated supply zone. I personally don't trade those because the failure rate of those are higher than 50%. They actually tend to not work out because you go against market structure when you do that. But it is a confluence that you could use, right? And say, okay, well, here was a supply zone and it taps into the supply zone. But what you don't know, it also happens a lot of times, this price will come into a zone like this and then just go right through it. And that happens more than half the time when you use them. Does that make sense?
Yeah. So for you, is this the 4-hour you on, right?
This is 4 hour.
So for you, one of these 4-hour demands down here, or is that like a strong zone? Maybe like maybe the one attached to that news candle, that demand right there, is that a strong zone for you?
Not really. I'm expecting for it to get ran through, only because it was made by news, and news is false volume. So if you take this demand zone here, you'd be waiting for price to come back into it. But I'm really waiting to see structure on the middle time frame tell me that it's trying to come back into it, which now you have a case for saying, okay, price could possibly sell from here and go down into the zone. But before that, you didn't really have anything. You didn't really have much to kind of say that.
Okay.
Even Calvin had mentioned in the chat, he said getting away from those unmitigated zones, like I explained, was one of the best choices he made in his trading. So it's like the failure rate is much higher than the actual win rate. And that's something you also want to go back and back test, right? Because there are a lot of theories and concepts out here that get passed around or get told or are taught, but you want to see how effective it is, because it could be a theory, but it's not an effective theory, you know, because you only want to take things that lead to you in lots of success, not lots of failure, you know. But when you take more time and you spend more time in market structure, you realize, oh, this actually goes against market structure. Why am I even doing that in the first place? So.
Hey, Brian, I have a question.
Mm-hmm.
It actually has to do with the area of price that you were just in. So even though the higher high was printed, like the higher high was printed on the higher time frame, and there was no middle time frame change of character yet. So
say it again, Kevin, one more time. Sorry, it cut out.
The most recent higher high that was printed.
Mm-hmm.
So that was printed before there was even a change of character on the middle time frame. So if that wasn't a news range and it was just say like on a normal day, you would continue to follow middle time frame order flow, right? Because it's bullish. Even though that the higher high was printed on the higher time frame?
Yes.
Okay, got it.
Yeah, no. Yeah, I would still continue. I would still continue on that.
Got it.
But then, you know to expect that it's going to change.
Right, yeah, because of the higher high was printed on the higher time frame.
Right.
Got it.
Hey B, what's up?
What do? P Money the greatest.
Hey, what's up, man? You already know, man. Can we go to gold?
Let's do it. Talk to me.
Man. So that chalk right there was my supply zone.
Okay. So you had kid.
And then yeah, then we go to the 15-minute. And you can rewind it back to my time for I don't know, I'm 2 hours ahead, I guess.
Yeah, so you're at 4 a.m. to 6 a.m. for me. Right here. Okay.
Okay, so let's see market structure on here. Okay. Yes, that is a POI where it chopped. You can draw that 15-minute POI.
Yeah. Okay. So you got your 15-minute POI.
And you can go to the 3-minute or 1 minute, doesn't matter.
Let's see, I'll go to 3.
What time is that right there? What time?
This is right at 6 o'clock.
So what is it? Yeah, I don't know the time difference. Are you 2 hours ahead of me or 3?
2.
So that's 4 a.m. Yeah, you can keep playing it.
Okay.
Keep playing it. Okay. You can keep going. Well, I didn't take this because news. Bam, I would have took that one, but news. So news messed me up today. I mean,
What time was news?
News was 5:30 a.m. So 7:30 a.m. your time.
What was 5? Oh, wait. No. Oh, yeah, I forgot about that. Yeah.
So
pick up for Josiah.
So that would have I would have took that trade right where your cursor is at. I mean, should I still continue the way I'm trading, or should I just take it anyway?
I mean, it's news. It did follow market structure, but it's still news. Let me see
Good.
something.
Thank you.
Because I've taken that trade many times and then I've won. It'll you can keep going, press play, and then price come back and price made a new supply zone. Price made a new supply zone in the BOS.
Yeah, but the supply zone was caused by news. That's we gotta remember, guys. All right, this is something about supply and demand, right? Here it comes with news, right? If the information was enough, we gotta think about it. Why do these big candles get printed during news? Because there's a rush of orders. But as soon as the news is done, people are taking profits or people are floating. And we got to understand how orders work in the market. In order to buy, like in order for you to make a buy trade, you have to have somebody on the other side who is selling whatever you're buying, right? There has to be available orders. That's why when people say, well, there's no way for you to make money in the market because somebody has to lose for you to win, that is a complete lie. You should slap them in the face, because there can be you could be buying where somebody could finish their sale and you could make money closing out your buy, and then they could open up a new sale and y'all could be basically making money exchanging hands. That's it. It doesn't require somebody to lose. It's a fallacy and a myth of trading. Now, when you have a news, yes, it makes a BOS, right? But it's a news trade. Why did this work? Why did this work specifically? And why did this BOS work? Because everybody buys and sells based upon the information that's out there. Interest rates rose. When interest rates rise, that means that the value of a dollar usually goes higher. But when they talk about the fact that they're going to be decreasing, and during the press conference, there are a lot of things that were said. That's why, for instance, gold gets a boost, because people start getting fearful of what's happening. So it's not just the news reaction, it's the continued forecast and outlook. That's the thing. That's one of the things about fundamentals people get wrong. They get excited about the move that it makes, but they don't think about the bigger picture. Because if I go on the weekly chart, I can show you literally the time back in October and November when the interest rates, the inflation finally came down. And you can really look at the chart with EU. It was going down until that day. After that day, it started going up. And it hasn't stopped since. So news can shift an entire narrative of what people think is going to happen to a currency, which can cause a difference of movement. But when you take things in isolations, like one news event, like this news event with unemployment claims, if it makes this POI based upon news, it's likely to come back and fill the space, because after it's selling, there was no reason for people to continue selling, because the whole reason people sold was based upon news. Does that make sense?
Mm-hmm.
It's a one-time event. Look at what happened before the news. The market moved sideways. After the news, look at how quickly it filled back up. Because all that was a temporary boost in the market. See what I mean?
So
I wouldn't base a POI based upon a news candle, because it's just false volume. You want to know where when this did not happen during news. That means that there was market intention that they expected gold price to go higher. This is a better POI to choose. There was market intention that the market wants to go higher, right? That they think the value of gold is worth more than the value of a US dollar. That's why the market continues to move up. This was a one-time news event that happened, and you don't know how they continue to feel until you watch it afterwards. And that's why I said, don't take trades within news ranges, because you didn't really see the effort of it until it happened about right here. That's why I drew that blue box. I just wanted to see what happened with inside of it.
yeah, but I've done this before, and like you said, I remember you said don't take trades inside the news candle range. So I've done this before, and price came above the news candle range, and price will continue to sell. So
it depends. It really depends. So what you have to consider is, out of 100 times, how many times did you succeed doing that?
exactly.
Because if it's under 50, I wouldn't recommend doing that. I know you've seen me occasionally sometimes trade before news and stuff like that, because I had a strong suspicion of what I expected to happen. It doesn't mean that it was a good thing to do. It just means I was just playing around in the market, and I shouldn't have been doing that. And it's just, you got to stick to discipline. You can always find opportunities where it worked and you weren't in it, but you have to not look at things in the short term and look at the full picture. If I did this 100 times, would it be a favorable result? Would I be glamorizing the 10 times or 20 times or 30 times I won, but I would be hurting the other 70 times that I lost? It's not worth it. So you need to go back and look at the math, look at the data, and say, all right, is this something I can consistently expect? Or is it just those one-time occurrences that, hey, I just happen to get it right, but over the course of times, it ain't worth it? And that's the only question that you can answer.
Okay, what about the chalk though? What about the chalk and price chalk? So it chalk, but that's still a sale regardless of not news or not, right?
This chalk?
No, the chalk to the left.
Chalk to the left?
Yeah,
Yeah.
right there.
Mm-hmm.
But okay. So can you rewind it a little bit? Can you rewind it? Yeah, at least like right there, yeah. So this BOS zone, the big zone, is this a valid zone still, even though that it chopped to the top right?
What are you talking about, this? Or are you talking about this?
So is this still a valid zone, even though this chopped right here?
I wouldn't even consider that by the time it chalked over here. It's more real. This is more irrelevant.
So
That's like that's past market structure. But you've already had a multiple BOS and a chalk after that. That would just lead you to further confusion.
So okay, so where that M15 POI, that's the market structure that you'll go with.
Yeah. Mm-hmm.
The one to the left is no longer valid. Mm-hmm.
It's no longer important. Like that goes back to the unmitigated zones that Josiah was just asking me about. I'm telling you, like the success rate of them is very low. You can go back and backtest it yourself, and you'll find it out on your own. You're gonna take more losses than it. But if you pay attention, everybody, you need to make a decision on what is going to be your sense of direction. If you're going to use supply and demand, use supply and demand. If you're going to use market structure, use market structure. If you're going to use liquidity. But you need to have something that guides your direction, and then everything else fits inside of that.
Wait, but isn't supply and demand, isn't that market structure as well?
No, it's not. But they go hand in hand. There are some people who don't even use market structure at all. They just use supply and demand, and they still have success hit rate because they base everything based upon supply and demand is the most important principle, and it's the foundation of everything I do in trading. Everything else builds on top of it. So you don't go against your foundation. If you build a house and the foundation is messed up, then what ends up happening is the house is going to crumble. It doesn't matter how many stories up it goes, doesn't matter how nice it is, doesn't matter what kind of fixtures you have in there. The house is going to crumble. So you can't do anything that would affect your foundation. So if it's market structure, don't make any decisions off of supply and demand that go against market structure. That's what contributes a majority of your losses. I've noticed that when I look into like the losing trade section, is that y'all pick one concept to overrule whatever your direction, whatever your concept is that determines direction. And when that happens, you end up taking losses because you're going against the main principle that guides your decision-making process. Does that make sense? And
what is that for this strategy? The main principle is market structure, right? For us.
No, it's what you choose. Okay. So like I said, it could be supply and demand. It could be market structure. There are some people you'll never see draw market structure on their chart. They'll just use supply and demand zone. They use flips and breaks and such like that. You'll have people that trade liquidity. The question is for you, like, what is it that you're choosing to make it to be? There are so many different options that you have. I'm a price action trader. What that means is that market structure is the most important thing for me. I don't supply and demand is only within the confines of my understanding of market structure. It doesn't take precedent. If you do SMC type trading is not really based upon market structure from what I can see. It's based upon people looking at, all right, supply and demand and what zones are being broken by what, who's in control, etc. And using that to be a definer of direction. And then everything else fits within inside of it. Chalks, flips, liquidity grabs, trend line liquidity, etc. If you're doing, for instance, like Precision Elites, their focus is on straight liquidity. And then they have all kinds of different things that they add to it. But liquidity is what determines directions. So what you have to determine is, as you're building out your version of the strategy, you just have to pick what's going to be the foundation that you choose everything upon. And once you do that, then you can't do anything that goes against the foundation. Everything has to fit. Everything has to make sense within the context of your foundation.
And your foundation is market structure, right?
Correct.
And then after market structure, you do supply and demand, right?
No, everything's within the context of market structure. Market structure is my guiding principle on direction and where I see perceived direction. Everything with supply and demand is just a theory that's within inside of market structure for me.
Yeah, so market structure is your everything, and then supply and demand is inside your market structure.
Correct.
Exactly.
So you'll never see me pull zones that go against market structure, because then I would be messing up my own understanding of direction.
So the zones I started from this video, that was correct, right? That's the 4 hour. Can you go back to the 4 hour? This is unconfirmed. Oh wait, this is, what is this? This is higher high, low, higher high, lower low. This is unconfirmed bearish, right? So that POI is correct, right? So inside here, inside this POI, 4 hour POI, I'll be looking for a 15-minute chalk, right?
Yeah, chalk or BOS if you already had a chalk. So yeah, either one of the two.
All right. Well, it's the same thing. Sometimes when I lose, I just be tripping, but whatever. It's the same. Story doesn't change. The loss is a loss. All right.
Yeah, but I mean, look at this, right? Don't beat yourself too much. The market made this higher high, went down to this lower low, moved sideways. The market used this candle to push up, right? This was the news candle. We still haven't even broken the daily range, the 4 hour range of news, right? This is why I didn't trade today, because it happens every time you have a big movement. There was a rush of people's orders. Now there's nobody else in the market because they're either taking profits or they're waiting for price to balance itself to where it needs to go. And because of that, that's why prices are more moving sideways than it was moving anywhere up or down. This, you can go back and look at every major events, like major FOMC interest rate hikes or CPI. It does this every day. It does this majority of the time, like at least 5 times out of 10. So that's the reason why I just didn't look at it. Like, yeah, price ended up going down, but the next candle, watch how it pops back up. It wasn't really interested in going anywhere. There wasn't no market momentum or movement really. So you based it on this trade, right? But you look at the sideways movement that you got on M15. Yeah, you made a BOS down here and it made a lower low and eventually made a lower high. But if it hadn't been for news, the market really wasn't going nowhere. That's part of reading the candlesticks that will help you to understand, hey, this is a high momentum day. So I know you've probably seen the M sometimes, that you'll see this M right here, right? And I always have it listed in my pictures. That's for momentum. I trade when there's momentum. I don't trade when there's not.
I didn't see. You said I see where you pointing?
This M down here.
Oh, M. Oh, okay. Yeah.
My strategy is based upon momentum. If I don't see momentum, I don't trade. Simply because These are the type of opportunities where you usually take a loss. If you catch this news, great. But does it really continue in a direction? Not really. It goes the opposite direction. And you could have profited. You could have profited buying from here. Then you could have profited selling from here.
Yeah, I just took all my trades out already. I would just, and for the record, how before news, if a news event was out, how previous you trade, or how and before?
I know that y'all ask these type of questions. I hate it because the way I respond, because I feel like it's not helpful, but it really just depends. Like I have to read and look at the market and see what happens, right? So you don't know what kind of effect news will have because it's not about the actual news, it's about the outlook. That's the key to fundamentals. Okay, great. The Fed raised interest rates. The Fed's been raising interest rates the last 7 meetings. I mean, last 5 or 6 meetings at least. But why? When did they stop? What is the outlook? Well, yesterday they gave an outlook, a grim outlook at that. So that's why the dollars get taken a beating, because people don't have confidence in it. Like this whole market moves on people's greed, suspicions, and fears. So when you begin to realize what the collective majority is actually like feeling towards something, the technicals and fundamentals, they tend to align. Yesterday, there was an interest rate hike, but there was also discussion that there's going to be another interest rate hike. But then there was discussion that rates would hold. There's fears that there's going to be bank contagion. Interest rates that go up cause for banks that don't manage their risk very properly to take losses on loans. Losses on loans are causing people, because of the age of Twitter, to have bank runs. It's destructive to the economy. People are scared. They're putting their money in gold. That's why gold's going up.
Man, gold going to the moon. Yeah, so it's okay. All right, whatever.
And the technicals even show that. So yeah, you got a break here. Yeah, you got another break here. You even got a BOS over here. You had a chalk here. You had a BOS only caused by news, and then the market continues upward. So what did that turn into? This was a small doji. This is your bullish movement, which showed your real intention. You go to the 4 hour, that's exactly what you see. Like doji candles, because there's not showing true momentum that the market wants to move in that direction. And then boom, we get this move upwards. Now, is it possible that we could sell from tomorrow on gold? Yeah, it's possible. But you have to wait to see what the market wants to do. You are in a 4 hour supply zone. So there is still a probability. You are in an unconfirmed bearish trend. So there's still a probability. But it's analyzing what you see versus what you want. Does that make sense?
Mm-hmm. Yeah. So like that's a chalk right there, obviously.
Mm-hmm.
Okay. Appreciate it.
No problem. And then I'm going to answer one last question from Calvin. Did I have a suspicion that unemployment claims would come in lower today? Yes, I did. Because the unemployment rate has barely hitched higher, but job openings are still plenty. So every time we've had JOLTS job reports, we've always beaten expectations by the number of available jobs. The unemployment rate barely has gone up. So while people are getting fired or leaving jobs, what's also ended up happening is that the market is seeing that those people end up getting new jobs within 3 months or less. You can read about that information on CNBC. So because of that, probably I suspected unemployment rates are coming lower, or unemployment claims. Because what's also happening too, it's been happening since the pandemic, is people are quitting jobs, and what's called the labor force participation rate is the rate that people are actively seeking jobs in the market. It's going down. So people are quitting and then they're not looking for a job, or people are quitting and they are able to find a job within 3 months or less, which is generally not what the market is. And by the way, every time you see these unemployment headlines, they don't take immediately. People are not getting fired immediately. It ends up taking a while for them. So.
Okay, cool. Thank you.
No problem. But all right, guys, appreciate the questions. And I hope that y'all have a good trading on Friday. We've gotten past some very important news that happened this week. I'm actually very optimistic now that the market will have direction because, like I said, it's not about the news that hits. It's about the forecast that comes after the news hit. And what does that mean for the implications of the economy? And the Fed did a good job of kind of laying out their expectations. People now can stop wondering what if, and you can see that the market really kind of can tell what they kind of expect to happen. So with that, hopefully what that means is that we will start seeing more momentous movements. But when you have a day that hit as hard as yesterday and had such big implications as yesterday, you're not going to immediately see that the day after. So sometimes it may take a day or two for the market to kind of come back. Movements where I see something like this is kind of showing us, intentionality. So we can kind of use that for our abilities to be able to not project, but react to what we see in the market. So, guys, if you didn't get,
Hey, B, one more question. I'm sorry. When do you break? I mean, when do you scale another trade? Is it when you break even, or you just tap it twice? Or like, when do you scale into a new trade?
I'll answer that in the questions in Discord. So I'll answer that for you in Discord. But all right, guys, make sure that y'all be aware of what's going on news events wise. Make sure that you trade following your plan. That is the most important thing. Make sure that you practice your plan so that you know what to follow. And with that, guys, if I didn't get a chance to answer your question, ask it in Discord, or you can also hold it until next Tuesday's call. But until then, I will see y'all and talk to y'all soon.
Thanks so much, man. Have a good one.
You too, guys.